Hi there, this is Bill with Smart Trades, and it's Friday, December 11th, about 11:05 Pacific time, and going to take a quick look at the Dow first. And so far, so good as far as our count. We have the ABC decline coming off of the high at resistance, A, B, C, bullish divergence again, and then a pretty clear impulse wave up off of there. 1, 2, 3, 4, and 5, or possibly 5 continuing here and extending up to resistance. So you could relabel this if you wanted and push 5 over here. Regardless, we're probably getting close to a near-term peak. I don't think it's going to blast right through this resistance in the first try up around the 10,500 mark, but we shall see. You never know. Breath is not too bad. It's not great, but it's good enough that the rally could continue a bit. So certainly a test of that area is not out of the cards at all. Let's take a quick look at the S&P as well. And the S&P is lagging a bit, and it looks more like that 5 had completed here on the last pulse. But ideally, we'll see a correction back into perhaps the previous fourth wave area, which is around 1100 on the S&P, or perhaps to fill the gap down around 1096. Well, early to tell. We need to see things unfold, obviously, before we get definitive on whether or not we're even in a correction. So let's be patient and watch it. Okay. The next important component here of our analysis is the dollar index. And the dollar index, as noted yesterday, put in a very shallow correction. And I implied that I thought that it might make a new high, and that shallow correction, which it turns out was probably a triangle, was reason to doubt that this rally was an ABC to this level, to the level of yesterday's highs. Wednesday's highs. At any rate, from there, we did carve out what appears to be a triangle, and you can relabel this rally 1, 2, 3, triangle 4, which is a classic Elliott wave scenario, and then an impulse 5 up, completing what perhaps is wave 1 of a trend change to the upside in the dollar. This is pretty significant in that if we get a corrective decline that holds above the lows down here around, let's see, about 74.20, then more than likely the bottom is in, and the dollar could be off and running in a significant way. Taking a quick look at where support may fall, and assuming that the high is in for today or for the move, 38% is going to come in around 76. That's also a previous resistance area and near support of the previous fourth wave of one lesser degree. And 61.8 is going to come in around 75.33. So, in general, we'll be looking for a decline perhaps into the, somewhere in the 75 to 76 area, perhaps favoring the middle of that range, maybe 75.50, 75.75. And but again, we need to see this thing unfold before we make any assumptions. Okay, so just a quick look now at the S&P again. This is a 240-minute. Let's shift to a daily and take a look at this very narrow range that we've been in. Basically a 25-point closing range, or about 2.2% from high close to low close since November 9th. And very narrow ranges of this nature tend to lead to big, sharp moves. And what I favor here is that we've got we're going to break out to the upside and perhaps test 1120, or the A equals C comes in for the S&P around 1159. So it's not out of the question. As you can see, that would coincide pretty nicely several weeks out with the top of the wedge as well. Now, obviously, if we break down below the bottom of this pattern, that would indicate that the top is already in. Certainly a possibility that the impulse wave that we're carving out right now is going to be a failure, or will terminate without making a new high. But you know, this kind of narrow range, if you look back all the way into 2007, 2008, 2009, this is the most narrow range extended over a month or so that we've seen over that period of time. The last similar narrow range was the contraction in August of 08. Obviously, what happened there is history. I, again, think that this breakout may initially occur to the upside, but that may be a trap for the bulls and pull them in just as this market is getting ready to put in a peak. Okay, let's quickly look at crude oil. Crude is a little bit of a concern in terms of the wedge scenario, in that it has broken through its wedge trend line. That said, as long as it holds above 66.06, which so far it's done, you can still count this as an ABC decline, and we may yet see a rally back towards the 84-85 level. That said, if we do take out 66.06, that'll give us a lower low, and by definition you've got a trend change there. So moreover, it breaks the wedge definitively, so that would be something I'd be looking out for here over the next several days. Crude needs to hold if indeed it's going to keep tracking up, and it's a pretty good indicator, obviously, of the economy in general. That's about it for now. Oh, let's take a quick look. Let's do a quick look at gold too. Okay, gold. This is the daily chart of gold, and what we have here into the a correction into the late August, and I count this as a triangle, and then out of there we have an impulse wave up 1, 2, 1, 2, 3, 4. Just to review very quickly, the retracement that we're at this level is almost dead on a 38% retracement of that entire move up. So although this decline in gold has been rather sharp, and you know, over a very short period of time, 38% is the classic support level for a fourth wave, and that's what I believe we're in. So as long as it holds here, and it does need to hold, the count is still on, and we'd be looking for another rally up 3, another pullback 4, which could come down perhaps to this similar level. This will be the previous fourth wave around the 1117 area, and then one last rally perhaps up towards about 1250. Anyway, let's not get ahead of ourselves. As always, we'll see how it plays out, but at this point 38.2% correction of the up move is typical, and certainly not out of the ordinary, so we'll hang in there. Anyway, thanks for watching. Have a great weekend. Bye-bye.